Lowe's are seeing 20 to 30% comps is because that's what people want. They're do-it-yourself kind of companies, right? And they're benefiting. And I would throw Stanley Black & Decker in there too, because that's actually led Home Depot and Lowe's by a mile, and they have 30% of their tools business is exposure to Home Depot and Lowe's. So I can find pockets for you, Kayla, in consumer. I do think there are the haves and the have-nots, but I can find plenty of haves, and the consumer's willing to spend when you have the have.
Sri, what do you make of the move we've seen in yields in the last week? It looked a couple of weeks ago like we were breaking out higher in terms of yield, but they pulled back again quite significantly, quite fast.
Yeah, I think the bond market is giving a better signal, Wilfred, of what is going on to the economy. I do not see a recovery in the second half of the year. I see it worsening in the third and fourth quarters. That is the message that you're getting from the 10-year Treasury yield, refusing to stay at a higher level. We hit about 71.5, and then we are back to almost 54.5. And my expectation is that you're going to get a new low, a new record low forever. Drag it down because the low income and middle income people are the bulk of the population. Luxury purchases simply cannot keep the economy up. All of that is coming to you in terms of the skepticism that the Treasury market is suggesting compared with the more closely at gold. Treasuries are going to do well, the German Bund, and you're going to look
said, I think this overhang makes it really hard to own these stocks. There's just too much uncertainty. And man, we have so much uncertainty in so many other stocks and sectors that are better positioned longer term. I'd rather pick and choose those than play around with this for the time being.
Yeah, and it certainly seems like that uncertainty is going to be playing out for several weeks, if not months, Stephanie. Reggie, I want to bring you back into the conversation as well, because when we look at the broader markets, we saw the Russell as one of the only averages that was in the red today. You are bullish on small caps. Why is that? Where do you think they can go?
Well, I think, first of all, my clients who trade from the GTS, they're bullish. We see nothing but rotations into commodities, gold, and small caps. I think that leads for a window to sentiment about the future, about improving the economy. Yes, there are parts of the economy that are strained, particularly consumer and particularly leisurely industries. But by and large, I think the bet is that the economy will be better over the period of time.
All right, we will leave it there. Thanks to Stephanie Ling, Sri Kumar, and Reggie Brown for the closing bell market zone. We will see where we go in the aftermarket. Meanwhile, let's get a news alert on Facebook. For that, we go to Bertha Coombs for the details. Hi, Bertha.
Hi, Kayla. CNBC has learned that Facebook CEO Mark Zuckerberg testified at a hearing before the Federal Trade Commission in connection with that agency's antitrust probe of the social network. The testimony was conducted under oath remotely over 2 days this week, as first reported by Politico. Zuckerberg and the CEOs of Alphabet, Apple, and Amazon testified before the House on antitrust issues last month. In that case, the issue of Facebook's acquisition of WhatsApp and also Instagram came up, Kayla.
Yeah, interesting, but of course you did reveal that they bought those companies at the times they were looking at also copying some of the services. So interesting, it was that testimony that sparked it. Thanks so much, Bertha Coombs. Up next, we will ask Delta CEO Ed Bastian whether more cuts and employee furloughs could be on the horizon when government stimulus terms expire in just over a month. We're back in 90 seconds.
Our retirement plan with Voya gives us confidence.
We can spend it now, and we're prepared for the future.
Surprise!
We renovated a guest room so you can live in it.
closing bell. We're back with Ed Bastian, the CEO of Delta, after a brief hiatus due to some technical difficulties. Ed, I'll restate my question just in case you didn't hear it before the break, which is that over a month ago, Delta signed a letter of intent with the Treasury Department to access a piece of about $30 billion in loans to fund your operations. Have you received any of that money?
The airline industry we know is essential to the recovery. So opening the economy back up.
$13 billion was returned to shareholders, $10 million in buybacks, $3 billion in dividends. Just this year, you've raised $21 billion, just over that. Over half of that was directly from the market. So putting aside even the government aid, do you regret doing any single dollar of those buybacks over the prior 5 years, given that you've had to fundraise at a share price significantly lower than you bought back stock at over the prior 5 years?
Well, it's great to be a Monday morning quarterback with the benefit of a pandemic in hindsight. The reality is, over the last decade, Delta generated $100 billion of operating cash, and the amount of buybacks were less than 20% of $100 billion. So the vast majority of the money that we invested went back into the business to improve the quality of the experience for our customers, to pay profit sharing to our employees, and to get our debt levels down to the point where we did get our investment grade rating back.
Ed, if your leverage has improved and the balance sheet has improved and you believe that traffic will come back early next year, what's the harm in taking a loan from the U.S. government as part of the $29 billion that's already been outlined? I mean, I don't want to continue harping on this, but it is a pot of money that has not been tapped. And in lieu of new stimulus programs, what is it about this that is leading you to shy away from actually taking it? Is it the the ban on buybacks? Is it the restrictions on executive pay? What is it that airlines and carriers don't want from this program?
Well, I think all airlines are going to make their own decision around that second tranche of the loan. For Delta, we haven't made that decision yet, so I don't want you to suggest we're not going to take it. But we're looking at finding alternative sources of capital because the Treasury will require collateral for that loan, and we're looking to find if there's a better form of financing, as we want to, as a private enterprise, to use that as the financing vehicle. You know, comparing the second tranche of the loan to the PSB extension are really two different things. If we did take the loan, there's no requirement.
Might have lost the Delta CEO Ed Bastian again there. I'm hoping he does come back because we've got a couple more questions that we definitely want to get onto, particularly on the outlook for demand and travel and business travel in particular going forward, which Delta's quite skewed to. We're just checking if we are getting him back. We haven't got him back quite yet. We are going to try though, and in the meantime, pivot a little bit not a lot, pivot a lot to a totally different story. Ilan Moy has the latest for us on that Steve Bannon story from earlier today.
Well, Wilfred, Steve Bannon has now pleaded not guilty in federal court to charges that he defrauded donors as part of an effort to raise more than $25 million to build the border wall. There are reports that Bannon's attorneys and prosecutors have agreed to a $5 million bond package. Bannon appearing in federal court virtually after being arrested this morning aboard a yacht. He appeared in the jail cell with his hands cuffed in front of him as he presented himself before the judge for this hearing. The judge was also appearing virtually. Bannon's attorneys were told were over the phone. But again, Steve Bannon officially pleading not guilty now to fraud.
All right, thanks, Elon. According to Tom Winter from NBC News, Bannon appeared quite tan after living on that yacht with an exiled Chinese businessman for the last several weeks. Let's get now to CNBC's news update. For that, we go to Sue Herrera. Sue.
Good to see you again, Kayla. Here's what's happening at this hour, everyone. Uber's former security chief is facing federal obstruction of justice charges. The government accuses Joe Sullivan of trying to cover up the 2016 hack of Uber's computer systems, which exposed information about 57 million drivers and passengers. Uber paid the hackers $100,000 to keep quiet and didn't notify the government of the breach. A spokesman for Sullivan tells the New York Times the executive acted with approval of Uber's legal department. A group of major news organizations, including the New York Times, the Washington Post, and CNBC, is joining the fight against the thieves Apple charges to put apps in its store. In a letter to the company, the group says it wants to pay less than the 30% of subscription revenue Apple gets for first-time purchases made through iOS apps. And some encouraging medical news for you. New research indicates that the virus that causes COVID-19 is not transmitted through breast milk from mother to her baby. You are up to date. That is the news update this hour. Wilf, I will send it to you.
Sue, thanks so much for that. Senate Republicans plan to propose a skinny coronavirus stimulus deal, which would include money to help solve the post office problems. Up next, we'll ask Vice President Pence's Chief of Staff whether the White House and House Democrats will support that bill. We're also trying to get back the Delta CEO.
CNBC News Update is sponsored by Comcast Business, committed to keeping you and your business connected.
I saved up some money and then found the home of my dreams. But my home of my dreams needed some work.
So if I was the first lender that even offered a personal loan, and I didn't even know that was an option.
The personal loan let us renovate our single-family house into a multi-unit home.
And I get to live in this beautiful house with this beautiful kitchen. And it's all thanks to SoFi.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking, maybe selling our policy could help with our retirement.
I was skeptical, so I did some research and called Coventry Direct. They explained life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-514-7800. Coventry Direct, redefining insurance.
Mr. Wonderful here. It's hard for everyday people to get access to startup investments. But with Start Engine, you can choose between hundreds of startups to build your portfolio. It's your turn to become a shark. Visit startengine.com today.
You've probably become an expert in a lot of things lately, but nanny taxes, no way. And you may owe them, even if you only pay $100 a week. So let HomePay by Care.com help. From taxes to payroll, get the first month free at Pay.com. Oh my God.
Welcome back. U.S. weekly jobless claims jumping back above 1 million. This is Senate Republicans planning to propose a skinny coronavirus stimulus deal. Joining us now in a CNBC exclusive, Mark Shaw, Vice President Pence's Chief of Staff. Mark, a very good afternoon to you. Thanks so much for joining us.
Will, thanks for having me on.
Wanted to ask about the level of divergence we are seeing on various economic measures. As you know, the weekly jobless claims moving in the wrong direction, up above 1 million again, and meantime, record closes again for the stock market. How much unease is that causing for you and in the administration, that divergence?
Well, I think what we're seeing actually is the markets are anticipating where we're headed. We're continuing to see cases falling with coronavirus. We continue to see businesses opening. I think there's been a lot of stimulus obviously put into the economy. And we see that the unemployment claims, continuing claims have come down, as you know. The bump up we think that came today in new claims we think is a seasonal adjustment. And we continue to see America open, and we're encouraged by that.
Do you think that the level of stimulus is an important swing factor? And to what extent do you think it would alter the urgency on both sides to extend and prolong stimulus measures if we did see a more meaningful change in direction, whether that's on the economy or the stock market?
Well, I think we're grateful the way that Congress came together initially with the first CARES Act and provided support through a program that I think Secretary Mnuchin brought forward in the PPP program. But I also think that right now, one of our ongoing challenges has been that we wanted to make sure that unemployment insurance was provided for workers, but we hear from a lot of people, particularly in the hospitality industry, who express concerns that that the level of the $600 a week check was also a deterrence for some people coming back to work. So that I think is it was necessary to provide support for workers, particularly when the virus came in from China, no fault of anyone here. But at the same time, we want to make sure there's growth policies, which is why the president advocated for the payroll tax cut. We were unable, obviously, to get cooperation from Democrats on that, so the president took executive action, and we believe that those sort of pro-growth measures are also beneficial to making sure that the rebound continues. We know that this president's policies created 7.5 million jobs in the first 3.5 years, and we look forward to continuing the low tax, low regulatory policies that generated so much growth in our economy in the first place.
Well, until we get the August jobs report, it's hard to see the full snapshot of what happened after the last stimulus package ran out. The market's looking increasingly like whatever is going to be agreed on between the White House and Capitol Hill will be a so-called skinny deal. What are the White House's must-haves in that deal? Is it PPP, eviction protections, unemployment? What are the items? If you had to pick 2 or 3 that you're really going to go to bat for, what are they?
Well, Kayla, I think that it has been monikered as a skinny bill, but it's another $500 billion price tag. So I don't know that we accept that it's skinny relative to what I think the Democrats put forward, the $3.5 trillion bill to bail out state and local governments. Yeah, it's not where they're looking to. We think spend unnecessarily. But I would say that the liability protection that Leader McConnell has advocated for, I think is a priority we hear from business owners that they think is essential to make sure they're able to bring their workers back to the workplace. Additionally, something that we've advocated is for additional funding for schools to make sure that schools have the resources they need to make any sort of adjustments in light of the virus to make sure that we're able to reopen schools for children.
Democrats have signaled that liability reform for them is a non-starter. You have the Chief of Staff, Mark Meadows, going up to Capitol Hill later this weekend to try to broker some sort of deal. I mean, what are the odds he's going to be successful, and what are the odds that liability reform is actually in that final deal?